This is a step-by-step guide on how to get trading opportunity using the advanced price action. Now, the advanced price action I'm going to be breaking down here aligns with structures, market structures, trend line, support and resistance, and Fibonacci. The market structure, we all know that the market structure, when we say market structure, some of us get confused. Some of us get confused. Now, what is market structure? Market structure is the natural movement of price in a pattern, either when the price is up, down, or sideways, and it helps traders identify the trend and make informed informations in the market or decisions in the market. Now, we have types of market structure is basically the uptrend, downtrend, and sideways market. So when I say that the market is going bullish or we have an uptrend market, it means when the market is creating series of higher highs and higher lows. When the market is pulling its legs upwards, creating series of what higher highs and higher lows. This is what it looks when the market is the basic what we see on our textbooks. This is what it looks. Then when the market is said to be ranging or neutral, then it is when the market moves sideways, up and down. It does not have what a movement. It's just moving sideways. It's just ranging. It's just consolidating. This is what we call a sideways market or a ranging market. Then in terms of the downtrend, this is when the market is pulling its legs downwards, creating lower highs and lower lows, lower highs and lower lows. So in basic understanding, this is what we know as what the simple trend, the simple market trend. But this is not how the market works on a real life chart. This is just to tell you or give you ideas on how the market works. Now, let us look deeply into what an advanced market structure is. But first, we know what a trend line is. We know what a trend line is. A trend line is a line that we use in identifying the market trend. Understand? So when the market is pulling its leg upwards, creating series of higher highs and higher lows, traders usually use a tool called the trend line to what identify price movement. When price is aligning with their trend lines, they get what informed opportunities. This is what an uptrend looks like, and for the downtrend, it's just the opposite of the uptrend, creating what lower highs and lower lows, just with the opposite of the uptrend. So connecting this point, this turning point, gives most traders the right opportunity to get into the market. So having known what this trend line looks like, for a trend line, it takes two to connect a trend line, and it takes three to get an accurate or a strong trend line. So the more the trend lines moves upper, the more likely it's going to break. The more likely it's going to break. So the trend line, there are rules to trend lines. One, you take at least two tops or two bottoms to draw a valid trend line, and three to confirm it. The stepper the trend line, the less reliable it becomes, and it's likely to break. So for an uptrend, when the market keeps pushing up with series of what higher highs, higher lows, higher highs, higher lows, higher highs, this trend line is likely to do what? To break, because this is more of what? A break than a continuation. The more the market keeps pushing up, the more likely it breaks. So when it breaks, it has identified, when the trend line break identifies what? A new trend beginning. A new what? Trend beginning. That is why the trend line break is most traders always take this trend line break as what? A good opportunity or a good signal to shift in the market or to change direction or change their directional bias. So that being said, same thing applies with what? with the downtrend, same thing applies with what? The downtrend. When price touches their trend lines multiple times, it is likely to what? To break as well. It is likely to break and cause what? A market shift. It is likely to break, and here this is where what majority of traders now what? Now we change in their bias, now what? Restructure their bias and start looking for what? A bullish opportunity. Now that being said, we now know how the trend line works. How the trend line works with what? The trend. So now we are going to combine everything. We are going to combine this in getting what? The right opportunity and how to what? Enter the market using what? The price, using what? The market structure, the trend line, and support and resistance. Support and resistance is just simply when the market is creating the new structures. When price creates what? A turning point. Let's use the uptrend as an example. When the market creates what? A higher high, a higher low, and when price breaks what? The recent higher high, it tends to come back. We would say that here becomes our resistance that has been broken, and price will always tend to come back here and get support for the continuation. This is just a simple terms. This becomes what? Your support when price comes back to that level. Support and resistance levels are not just thin lines, they are drawn as zones. They are drawn what? As zones. Same thing applies to the downtrend. When price is creating what? Series of what? Lower highs and lower lows. When price takes out this what? This support at this point, it's what? Tends to come back to what? To hang as resistance, then find more pushes to the downside. Now this point being what? This point being our support that was broken will turn what? To become a resistance in the future. So now knowing what the support and resistance looks like, we will now combine all this to what? To get a unified information on how to what? Find opportunities in the market. Remember, this is just what? The basics. This is what the basic movement of the market. But on a real life market, I'm going to show you now on a real life market how price actually works. Now we are going to use an uptrend for example. Now in an uptrend, the normal basic trend tells us that price moves this way. On an uptrend. This is what the basic tells us. The basic trends tells us when we are going up. Now, if you use this approach to come into the market and feel like you're going to see this exact movement in the market, you may be wrong. You may be wrong. So now let us look at the advanced price action or market structure. When price is creating what? When price creates like a new high here, a higher low, yes, and breaks this point, this recent high. This is what it looks like. This is what it should looks like on the lower time frame. Understand? This is what it should look like on the lower time frame. These are your what? Higher time frames levels. These are your higher time frame levels. These are your higher time frame levels. So when the higher time frame is what? Is bullish, price is creating a series of higher highs and higher lows. The lower time frame has movements in it. When this price is going what? Came down to this point, the higher time frame is what? Creating series of, the lower time frame is creating series of what? Internal price action is moving up, is moving here, something is happening here. So when you have find your what? Directional bias, let's say that your higher time frame is what? Is bullish. This is your higher time frame right here. let's use this as your higher time frame. Let's use this as your higher time frame. So let us map this out as what our higher time frame. So that being known that this is our higher time frame, that being known that this is our higher time frame, so market is creating what? Your high, your what? Your higher low, higher high, higher low. Once price is not taking out this last previous higher low here, once price is not taking it out, we are still what? Considering this as what? A bullish market. Price can as well get to this point and not take out this what? Last higher low. We will still consider this what? Our what? We will still consider this as a bullish market. We still consider this as a continuation until the price takes out this higher time frame high, higher low. Then we can say that everything what? Have shifted from being what? Bullish to what? Bearish. So that being said, this becomes what? This becomes what? Our higher high break. Market is when the market keeps breaking higher highs. When the market keeps breaking higher highs, it turns what? To become our higher high breaks. So now this is where we get informations. This is where we get informations from. This is how we now enter this trade. When this market takes out this recent high, it will always come back as what? To find support at this level, to continue moving up. So let's assume that the market took out this resistance here. It's going to come down to find support somewhere here. When the market does not find support at this point, the next place we are looking to what? To get into the market, it's two areas. At this point, this support down here, or if you ever look up from your higher time frame, this supports down here, or if you ever look up from your higher time frame, when price is disobeying this what? Current resistance here, where we get in is what? This support down here. Remember, we said the rule of an uptrend, for this to still continue being an uptrend, price shouldn't what? Take out this last higher low. For us to keep staying bullish on this opportunity, price shouldn't what? Take out this higher low. So now we have known that this, since we have known this, let's see how we get to what? To get to take information, to enter our trades, to get entry reasons. Remember, that same rule applies for what? The downtrend. On the lower time frame, at this point here on the lower time frame, when price is coming down to push up, we have series of what? If you go to your lower time frame, price will be creating series of what? Higher highs and higher lows, just as what is happening here, just as what is happening here on the lower time frame. If your higher time frame is bullish, the lower time frame will be what? A little bit bearish. But most traders will feel like, okay, we have changed, the trend have changed and everything have changed. Meanwhile, this is just a correctional phase for the what? For the higher time frame. Then on your lower time frame, this is what is going to be happening there. A strong trend will be pulling down. So for us, most traders get to what? Take this short term sell and exist early, then realign with the market overall market trend from the higher time frame. Now the lower time frame is creating a series what? Of lower highs and lower lows until it finds support to what? To shift from this point. So that same rule applies to it. Once the price does not take out the what? The last lower high, will still remain bearish internally on this price action that is happening here. It is creating was the inside of this point is creating small movements. It is creating small movements small trend movements around this point. It is creating small trend movement around this point, giving us what? Lower highs and lower lows. Giving us lower highs and what? Lower lows. So that being said, this was our last what? Our last lower what? Lower high. That being said, this was our last lower high. And you know the rules. The market should not take it out. If the market takes the last lower high out, everything shifts. We now get what? Our market shifts, our market structure shifts. Now, this is how we combine the trend line and the support and resistance to it. Remember, as I said, when price is not respecting this resistance around here, it tends to come down to this point and find resistance to make and find what? Support to push it up to the upside, or an area of fair value gap that will act as what? Support to the market. So now when the price has gotten to an area that it finds support to the market, it does what? It does shift. What will wait will come down for this whole thing to do what? For this whole internal trend to stop going downtrend and start moving upwards. The price actions here will stop what? Moving those lower highs and lower lows, lower highs and lower lows, and start creating what? Our bullish opportunity, realigning with the market, with the higher time frame what? Market trend. Now, as we all know that this internal downtrend is just a minor pullback in the market. We want what? A bullish market. We want to what? Continue the bullish trend. Now, this is where the trend line comes in. This is where our trend line comes in. Remember what I said the trend line is. When the trend line breaks, it was a strong indicator that the market is starting a new trend. When the trend line breaks, it is saying that the market is starting a new trend. Now, at this point in time, when the trend line breaks, we now start looking on that our lower time frame. That is where our opportunities, where we find our opportunity. Remember, this is our higher time frame. And we have found our structural bias here, that the market structure is creating what? Higher highs and higher lows, higher highs and higher lows. So the market is coming down somewhere. But on the lower time frame, something is happening there. Something is happening on our lower time frame. Then we'll move down to our lower time frame. We'll carefully watch at what? As price is coming down. Now, carefully inside our lower time frame, what do we want to see? We want to see this downtrend stop being downtrend and start creating uptrend opportunities. Now, we said that price should not what? Take out the last lower high. So price was creating lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high and lower low. Then finally, somewhere around here, the market does what? Takes out our last lower high, indicating this is the first indication that this price is the price does not want to go down again. It is now aligning with the higher time frame trend. Now, the second confirmation is the trend line break. This trend line now has been broken, which indicates a new trend is about to start. Indicates that a new trend is about to start once this trend line has been broken. Now, how do we enter?